Good afternoon, ladies and gentlemen, and welcome to this week's live trading session. We will talk a little bit about the week so far in a few minutes, but we are looking at the US Open, so we're going to focus on the Dow Jones again this afternoon. Apologies that there's not much variety in terms of the times that we can do the live trading sessions. The reason being for that is that there hasn't been a great deal else in the economic calendar or in the data calendar over the last couple of weeks. So we have been restricted to the US Open. That will change next week. We have non-farm payroll, we have the ADP numbers, I'm sure there's some other things that are occurring next week that don't immediately come to mind, but we can certainly organise the live trading session or the poll in relation to the live trading session around a couple of other events as well. So please choose as you wish, and we will do that. So markets today, obviously the key thing yesterday was the Dow Jones rallied up to 30,000, closed above that level, and Dow futures spent a bit of time above that level as well. We are in uncharted territory when we trade at these levels. The market hasn't got any history up at this point, so what you are going to run into from time to time is stops, and we'll have a look at some of the activity that we saw yesterday in a few minutes as well. And what you often find when we get into these areas as stops trigger and programs trigger as well, you start to get markets that run away with you, and you need, better not use the phrase I was going to use, but you need some patience and some strength of mind to work your way through some of these accelerating moves to the upside, because if it is just stops, if it is just a program trading, as we get above those levels and there is no follow through, the market is going to turn and come back in the opposite direction. So just to have a look at the Dow in relation to what we're going to be doing today. So you can see the extent of the rally last night or early this morning. Asian markets, in advance of the Asian markets, or around the time that the Asian markets were open, traded up to about 30,150. So we'll take this back a period in a little while, and then we've traded down towards 29,900 or around just above 29,900 on a couple of occasions today. So the real question for the markets, I suppose, is whether we can hold on to this level, how long we can then maintain the market above these levels. And obviously there's a lot of positives that are going around that people are relating to Biden's transition to be the President of the United States, Janet Yellen's appointment as Treasury Secretary, I believe, and a few other things that are going to be, or are believed to be, very pro-market, pro-business, pro-economy, and potentially some moves afoot again to reawaken or revitalise the pandemic stimulus that has been working its way around Washington DC for quite some time now. And so all of those are positives. Can see this market trade an awful lot higher. The market is seeing through the worry of COVID-19 at the moment, although some states are imposing more localised restrictions at this point. My worry or my fear whenever I trade up towards a new high, and I have some direct personal experience of it, is how much further can you go? You can see a short squeeze and you can see the market pop considerably higher, but you want to see momentum, you want to see some other fundamentals that are back in the move to those levels, or as with the last few times that we've traded above 30,000, and we'll look at that in a second, the move is usually quite short-lived, and then we have a period of some form of correction or minor correction, so that investors can get back into the market, and that may be what we're seeing today. It is Thanksgiving tomorrow. Trading around Thanksgiving is always quite awkward. Traders leave their desks, go back to their homes to celebrate Thanksgiving, and so you see a lot of travel and liquidity drying up very early on the day preceding Thanksgiving, and obviously the majority of people aren't back until the Monday, so we're going to see restricted liquidity over the next couple of days. So you don't really want to be caught with a position over this period, because you will be holding it a little bit longer than normal. So just in terms of what we're going to be doing first, or what I'm going to be doing, you don't have to do it. So that was the high today, or very early this morning, 30,156, and we've been down towards 29,900, and have held on to that level. It's not a key level, it's a big number in terms of the each 100 points that we see in the Dow, but doesn't really have any greater significance than that. So on the open, are we going to see a rally back up towards the 30,000 level, or are we going to dip to below 29,900? And we did close above 30,000 last night, so 30,045, somewhere around there, I think, which is just below 30,000 in the futures contract. So we're forecasting a drop of somewhere of about 40 to 50 points in the Dow futures at the open, as we currently see. As I've mentioned before, I struggle to buy at these levels, and I think that's some of that comes from my history when I was trading the Nikkei 225, and the Nikkei 225 was trading at 39,000. I was an active buyer around those levels, and I was a buyer all the way down, and didn't because I had such a large position. The ability to change that around and change my approach to the markets was removed. But as a consequence, psychologically, I am very reluctant to buy when we're approaching new highs. You see a number of failed attempts to jump through this level. We've seen a couple of those already over the last couple of weeks. When the Nikkei 225 traded up towards 39,900, can't remember what the exact number was now, it did stall short of 40,000, but those levels have never been seen again. And we're talking about something like 25 years have passed, and the market is probably at 26 or 27,000 now. I didn't check before talking to you. So in terms of the approach, we're definitely in the lower half of the trading band from early this morning. The key entry or the key factors that we need to take into account when we're looking at this trade is at what time do we want to get into the trade. We traded around 2 o'clock this afternoon, the market would have been a little higher, around 29,964. Had you sold then, you could have bought back 30 pips, 35 pips on that particular trade, and then as we'd rally back towards that level, sold again and still be in the trade going forward. So you can see with this movement here that there are a couple of times since about 1 o'clock this afternoon that were you shorting ahead of the market open. You could have traded there once, you could have traded again here, and then potentially be back in the market 20 pips in your favour before the opening bell comes around. So I'm just going to put on the one-click trading just to make it a little bit easier. I'm going to remove this last line just to make things a little bit easier. Sorry, one-click trading's gone away. And so for the next 3 or 4 minutes, I'm gonna sell, or I'm probably, if we don't see a drop off between in the next couple of minutes, I'm probably going to sell the market for the first 5 minutes of trading, or sometime in that period, and look for a fall back towards 29,900 before I close the trade. So in the last couple of the weeks when we've done this, and I know some of you were very successful with it last week, a couple of people taking 100 plus pips out of the trade. I didn't have TP levels in, and but that was because of the lateness of the trade. So I'm going to try and be a little bit better planned in terms of the way that I'm going to approach this this today. So I'm probably going to sell it a little bit earlier than we've done over the last couple of weeks, and then look to buy back at 29,900 and probably put a TP in around that level. So there's not too much happening now. The markets are matching up, you know, buyers and sellers are coming in, and people who are looking at the equity markets in particular will be seeing a bit of a bias building, whether that's to the buy side or the sell side. And you know, from the information that's available to us from the futures markets and the way that it's trading, the bias at this moment is slightly to the sell side. So that's why we had to see this 50 or about 50 pip lower open on the Dow, and we're sort of ticking around those levels. We've moved away from 940 now, so if we see a pop back towards 940, I'll sell the market at that level, and then we'll look towards the open. But the last 2 weeks, this live trading session has been very successful, probably more successful for you guys than for me, because I've been talking and trying to do things at the same time. You know, it's run away from me a little bit. So we're 10 pips lower again. So if you know, going back to that trade, had you entered the trade a little bit earlier at the here, you could have been into the trade 3 times already, or a minimum of 3 times already, and then still sold on the opening bell. So we're 10 points lower from when I started talking. You can see that now we're looking at a minute chart here, so the moves are a little bit exaggerated, but you can see now this this movement going on as buyers and sellers start to match up, and the bias that traders are seeing on their screen is changing somewhat. But we are, you know, 13 or 14 pips lower than when I first started to look at shorting this market. So the dilemma, and there is no necessity for me to talk all the way through this either, I must remember that, but the dilemma now is whether we change the approach, which I really don't want to do. I think, you know, and I've mentioned this many times when we've been looking at this and talking about it on different occasions, the tendency, and it is a distinct tendency for the European markets, is to trade a little bit more positive than the opening bell, and then after the opening bell has run through and we see that solidifying of the market then tends to choose its direction after that first 6-7 minutes of trading. So we're kind of in the middle of the range that we've been talking about. I might just wait for the bell to go, see if we pop up and then sell into it. Unfortunately, I won't be able to put a TP on it until that happens, and you can see now market moving considerably more, very close to the opening bell, back at 43, 42, 44, 45, 46, 49, the market's open. So I'm going to sell there at 43. Market's already gone down a good bit. I'm going to just try to move a TP down to 909, and we'll see how we go. So very close to the TP level. My luck this week, will probably bounce off of it and never see it again. Just get ready, and there you go. So again, and the market now is below that 29,900 line, and the question mark will be over whether we hold it or not. So just to reiterate what happened there, and we're not even a minute into the market opening. We've taken our trade, we've exited the trades. We sold at 29,938, bought back at 29,909. So 29 pips of a profit, less than, 15 seconds worth of trading. So we'll just watch this for a little bit longer. As I've mentioned, so we'll just widen out the time frame that we're looking at on. So this is a 5-minute chart at the moment. So again, the thing to note, or potentially, whether I would trade again today. I've been over trading a bit the last few days, and I need to really curtail that. But you can see there the lows gone just below that 29,900 level. So we're open. We're a minute open now. More of the stocks will be open. There might be a lot of opening orders, some programs that are kicking in that need a certain amount of their execution to be done within the first 15, 30 minutes worth of trading. So this is a trade that I would be doing in more size, because it is the trade at the moment, and for the last decent period of time, that has been returning time and time again. So I'd be looking to increase volume around this trade and get into it. One of the things I've been toying with, as you see this juxtaposition and this movement within the market, is possibly taking 2 trades, both sides of the trade, and seeing if I can get in and out of both of those trades as well. Very risky move. You are hedged whilst it's open, but then you need to make sure that you leg out of it in the best possible way. Not saying that I encourage you to do it this time. Let me play around with it a little bit first before we do that. But you can see how the market is stabilizing now. Do we hold this level and then start to push back to 30,000? Just with the so I'll move away from this now. 29,900 is holding at this particular point, and we'll come back to it in a couple of minutes. But with the markets in general, at this point, we gold obviously caught me badly on Monday, as did the Dow yesterday. My approach is quite simple. I think 1800 will hold, and will continue to hold. So any pullback to the 1800 to 1805 level, I think does present a buying opportunity. Equally so, and I think you will see ranges. So the last number of years there has been a fairly decent rally into the year end, but certainly, and I think that we will see something similar again this year, with positive news coming through from Biden. I think there'll be more positive vaccine news before the end of the year. You can see that in the market reports that I'm writing in the morning. And I think there is the potential to push above that 30,000 level and hold on to it, quite considerably. Everything, as you know, is about timing, as exhibited there with the live trading session. So with gold, as I mentioned, the point I was trying to make is that I'm a buyer of gold in that 1800 to 1805 level. And each time we rally above 30,000 in the Dow, I'll be looking to short the market and take advantage of any pullback. And I think there will be pullbacks. There will be, equally so, there is a fear of missing out. There are still some investors on the sideline who will potentially get involved in the short term, and that might provide that momentum to go to the upside. Had you, as I've mentioned with this trade many times before, you're looking to be in and out of this trade in the first 5 to 7 minutes. We're 5 minutes into the opening of the Dow now. Still trading 29,900. It's probably not been as much movement as we might have seen, but we sold there above 29,930. We're probably 40 points lower now. So nice, decent returns for everybody. It's 5 or 6 minutes. It's not going to stress the life out of you. Done in size or more size than you normally trade, it can generate the returns that you need. This is similar to the DAX early in the morning. It's not quite the same sort of movements, but equally so. I think you tend to see with the DAX early in the morning that after that first 5, 6, 7 minutes, you get the true movement that's coming through in the DAX. So look, we're pretty much done there. I don't see any questions coming up, so I get off reasonably free today, but that's 3 out of 3 now for the live trading session, so thank